Welcome back to our channel. In today's video, we'll dive into a detailed analysis of the ER/USD pair, exploring both fundamental and technical factors. If you find this analysis helpful, please like this video and share your thoughts in the comments below. Let's get started.
Monetary policy divergence. The primary driver of this trade idea was the diverging monetary policies between the Federal Reserve (Fed) and the European Central Bank (ECB). The Fed had initiated a tightening cycle, raising interest rates and signaling a hawkish stance to combat inflation. Meanwhile, the ECB maintained a dovish position, keeping interest rates low and suggesting that accommodative policies would continue to support the fragile Eurozone economy. This divergence suggested that the EUR could weaken relative to the USD as investors sought higher yields in the US. 3. Interest rate differential. The interest rate differential between the US and the Eurozone was expected to widen due to the divergent monetary policies. Higher interest rates in the US tend to attract capital inflows, supporting the value of the USD. Conversely, lower rates in the Eurozone may lead to capital outflows and pressure on the EUR. EUR/USD had broken down below critical support levels, indicating a shift in the underlying trend. This breakdown suggested that selling pressure was dominant and that further downside potential existed. Key support levels often act as floors for a currency pair, and a breakdown below these levels indicates a potential change in market sentiment from bullish to bearish. Such as moving averages and oscillators, confirmed the negative momentum in EUR/USD. For example, the pair may have been trading below key moving averages, like the 50-day or 200-day moving average, indicating a bearish trend. Oscillators like the Relative Strength Index, RSI, may have also entered oversold territory, suggesting that the pair was due for a rebound. Candlestick charts provided additional insights into market sentiment and confirmed the bearish bias. For instance, the presence of bearish candlestick patterns, such as engulfing or harami patterns, below the key support levels, reinforced the decision to go long. Analyzing trading volume and market sentiment indicators also supported the trade idea. High trading volume on down days indicated conviction in the bearish move. Sentiment indicators, such as the commitments of traders, COT, report, showed positioning favoring the downside. In summary, our long position on EUR/USD was supported by both fundamental and technical factors. Weak economic data, deflation concerns, and diverging monetary policies pointed towards EUR weakness, while technical indicators confirmed the bearish sentiment and identified potential entry points for the trade. Remember, while these factors provided a compelling case for the trade, the market can always surprise. Proper risk management strategies should always be employed. If you found this analysis helpful, please give this video a thumbs up and let us know your thoughts in the comments below. Don't forget to subscribe to our channel for more weekly analysis. Thanks for watching, and see you next time.